Speaking of the crocodiles, I would be perfectly comfortable selling short here, the doji, confirming resistance, and then the market pushes above it. I don't remember what the news was, but this is what's going to happen. This can happen, and we have no control over this. Okay. L. Okay, we're still looking at the word discipline. Let go of emotions. Okay. Psychology. Okay. It's human nature, first of all, not to accept losses. That's why I suggest putting stops in at the beginning. And this is why, how many of you have trading journals? Everybody should be using a trading journal. All right. The reason for doing the trade, the stop out level, the risk, what happened, lessons learned, and that's a great way of helping you get very, very objective about the market. Very important to have a trading journal. Lessons learned and so forth. Now, the challenge we have is what in psychology is called anchoring to a position, okay, or anchoring to an opinion. So in the markets, what this would mean, if we're bullish, we tend to focus on the bullish news and downplay the bearish news because we want our opinion to be confirmed. On the flip side, if we're in a short position, we're going to feel like this. We can't do that. We have to, and this is what the candles are really good at. By using the candlesticks correctly, it'll really help foster an objective view about the market. Many of my institutional clients know the candles inside out. The reason they use our service, I don't want to know their positions. They get completely objective advice from us, and they like it. That's that outside voice. So here the market is moving down. If we're short and we were emotional about this or anchoring to a position, we'd say to ourselves, hey, I'm short, and the market's making lower lows and lower highs and lower closes. You know, I'm cool, right? I'm right. I'm never wrong. But really, if we analyze the candlestick signals, what are these candlestick signals showing us? This is the pound yen. What is it showing this in the pound? Right. As it's moving down, even if you didn't remember the hammers, those long lower shadows, right? You should really be saying to yourselves, yes, the market's ascending and I'm short, but these long lower shadows are showing me I should scale back a little bit. If you can, stand aside or step back from the market. Ideally, one should be also able, depending on what the market circumstances are, to go from I love the market to I hate the market. Most of us are not going to be able to do it, but here's a case in point. See how the market tested support and the red lines there? Okay. And you might say you like the market every time it tested the support, but as soon as the market broke the support level, old support should become new resistance. You really have to say the market is telling me something different now. I don't like the market anymore. Many of us are not going to be able to go from long to short, okay? But to be truly objective about the market, to step away from the emotions, you have to say, okay, I may have liked the market before while it held support, but I don't like the market now because the market told me it failed to hold the support area. We're not smarter than the market. We're always picking up those little clues the market is giving us. Pace the trades according to the market environment. Okay? That means that we should be looking at what I call being a market chameleon, just changing our stance according to what the market is doing. Each session, the market is giving us new information. And to be a really good trader, we have to always assess what the market is telling us. The market today is not the same as the market yesterday. So this was a chart we had seen before. Remember, with the surprise news item, we would have been negative on the doji, but the market pushed above it. Okay? But now we have new information. The market had a resistance area. So although the surprise news item really pushed the market higher, we're now analyzing the market in the condition of the new environment. What's going to happen now if the market's good? Old resistance should become a support level. Because the market's changed. With those doji, the outlook was negative. The market pushed above the doji. It's telling us that our outlook should adapt to it. And because it was a prior resistance area, old resistance should be new support. Okay. adapting to the market. And this section has to do with using, maybe adjusting stops or taking some profits. So here, okay, what pattern is this? Quick. Okay, this is a piercing pattern. A bullish engulfing pattern would be if the white candle wraps around the black candle. Almost a bullish engulfing pattern, but not quite. Okay, what's first support on this? Where's the support level on the piercing pattern? And give me a number. Low. It looks like 119. Okay, 119. All right. So based on this, what's happening today, my support area would be 119. No problems with that. Now, time moves on. This is that piercing pattern in the green semicircle. Is first support something different now? Okay. How about over there? Because the market is telling us, yes, we still have support near 119, maybe 119 and a quarter, but now first support is 120. Could we have known that on the piercing pattern? No, because we did not have the new action, the unfolding action. So now we say to ourselves, okay, there's a potential support area at 120, and maybe the market won't pull back to the piercing pattern. Okay, maybe the 120 area would be a better buy. So we have a support area. Remember, the candlestick screener. Is the market at support or resistance? Is that support? On the blue double lines there, right. But the second aspect with the screener, are there any signs, the prior trend, in this case down, are there any signs the market's losing steam? No, so I would not be buying here. How about here? Yes. So this is what I mean by adapting to the new market circumstances. Initially, our support area was the piercing pattern, but because the market told us, for whatever reason, instead of 119 being support, the dollar, this is dollar Swissy, the dollar had support around 120. That becomes a potential support area. Okay. And perfectly fine target. This would have been a great risk reward. But if you were waiting for a pullback to lower the piercing pattern, it wouldn't have happened. And you had plenty of clues to see that. Same thing here. Okay, negative divergence here. Okay, the market made the same highs. And if we sold here, what would our potential target be? Maybe, okay, by the way, this is what I would have is S1 minor support, only because it's the lows on a couple of sessions. Our more important support area would be S2 with an asterisk. Okay, because look at all the resistance there. All right. Now, the market is pulling back, so initially, if we sell there, the first support is S1. We're not viewing it as major support. But look what happens now. This is S1.